firstly, what does today's news actually mean?
On face value, it means, inflation has ticked up where it was higher than it was expected to go up, but also we were kind of in the context of seeing inflation starting to fall, as you mentioned, and it had dropped below the Bank of England's target of 2% in the previous month. So that's the sort of background to this. We were starting to see inflation come down, and it's appearing to be more volatile because now it's ticked up, and also some of the other inflation figures, such as core inflation, has also ticked up, and services inflation has ticked up. So it was not in line with what was happening in most recent months, but it's worth putting it into a longer term context, which is it's nowhere near as high as the double-digit inflation we saw in, say, 2022, where it peaked at over 11%. And it's nowhere near as high as that, but it does indicate that the cost of living crisis is far from over.
Okay. That's the point I did want to come to here, because some people can get very much confused with what we are actually gauging when we talk about inflation regarding the increase in the price of something over time. So as an example, if a bottle of milk costs £1 but then is £1.05 a year later, then annual milk inflation would be at, let's say, 5%. So on the basis of that, we've heard a lot in recent months about inflation decreasing. So why has it now risen then?
Yeah, so inflation is driven by lots of different factors, domestic, external. In this particular case, it was energy prices that were really driving this. So wholesale energy prices had been driven up, and that has an impact on our sort of energy bills and the costs that households and businesses are facing. So it's ticked up again. So these figures are telling us that, prices are rising, but it's the rate at which they're rising. So once you look over a longer term, we know that prices, say, of milk and food and other key goods have risen over a longer term. But these figures are sort of monthly figures, and they just tell us the rate at which that's happening.
Okay. And so is this something at this point that people should be concerned about? You just mentioned earlier, Danisha, that it shows that the cost of living, crisis has not gone away.
I think there is a deeper issue here, which is that over the longer term, the cost of living crisis hasn't gone away. And in particular, this kind of inflation, which is driven by external forces, is very much, it very much impacts people on lower incomes and the poorest households, because energy bills are a big part of the basket of goods that they pay for. So it hits the poorer households disproportionately. It's also really important to note that our responses to this inflation that we're seeing, which is externally driven, is very blunt and hasn't been very effective. So what we're seeing is this will impact what the Bank of England will do with interest rates, and it's likely to slow their approach to cutting rates. But this is quite damaging for households and businesses who are facing higher, borrowing costs, and it will impact very kind of seriously. It impacts our ability to implement policies that lead us to decarbonising our households, to bring down energy bills, but also shift to renewables. And these kind of longer term goals that we need to implement to tackle the external forces of inflation are not helped by higher interest rates. So there is sort of a deeper issue here that we need to look at the toolkit we have to deal with this kind of inflation. And it's a very blunt use of inflation. It's very blunt to use interest rates to deal with inflation.
Okay. The other element, though, is, and some might be thinking about this, the fact that only earlier this month, the Bank of England dropped interest rates. So after also decreasing the rate in the summer, now that's the first in 4 years. Could that have had any impact at all on inflation?
I think I've just returned to the fact that the use of interest rates is very blunt, and actually it takes a long time for it to factor into the economy, for it to, for that major interest rate, for it to impact other parts of the economy. It takes a while for it to feed through the system. So it's unlikely it has an immediate kind of effect when they do that. Overall, I would say there are lots of other things the Bank of England and the government could be doing to impact inflation that we're seeing. And we really need to see them put a lot more effort into renewables and sort of ending our dependence on fossil fuels, because that's what's leading us to be so dependent on these sort of energy spikes in our energy bills.
To come back to you though, of course, when we talk about this, renewables, that again is going to be something that could possibly impact, I don't know, people's lives in 3, 5, 10 years. What about what can be done right now to impact people's lives?
Yeah, right now we really do need to see the government the Bank of England certainly not slowing their interest rate cuts, because we need to see those borrowing costs come down for both households and for businesses. That was really important. And secondly, sort of longer term, the government could be investing in public services, because a lot of this inflation hits the poorest households disproportionately. So we need to ensure that public services are meeting their needs to protect them against these higher prices.
And if anyone would like more details around positive money, what do they need to do, Danisha?
Yes, you can go online and check out our website, Positive Money UK, and we have various reports that you can have a look at. And we do a lot of work on inflation and how we should be tackling the current causes of inflation, which are related to our dependence on fossil fuel consumption and climate change.
Fantastic. Pleasure having you on BBC Radio London this afternoon. Danisha Kazi there, Head of Economics at Positive Money. And as you mentioned there, you can head to the website if you would like more details.